Hey guys, I've been tracking the US economy for some time. Most every economist in the multifamily space especially, they agree that a recession is coming. The billionaire hedge fund investor Ray Dalio, he agrees that a recession is likely too. We just don't know exactly when it's going to happen. So as of today, mid-April 2019, I'd venture to guess that we are probably 1 to 2 years away from a market correction, not a full-on recession, just a correction. According to a recent article in the Wall Street Journal, job growth in early 2019 came in below expectations. The US gross domestic product, the US GDP, that growth has been fading since that article, with an annualized rate of in excess of 4% in the second quarter of last year. And it's fallen just a bit till now. The Federal Reserve, they forecast, it suggests that in the first quarter of this year, annual growth may fall below that 1% mark. I personally believe that all this is cyclical, but when the Federal Reserve sees these numbers, they pull back on their plans and aggressively raising interest rates, and it shrinks its balance sheet as well. So the thing is that there is no way to know whether to wait 2 years or 8 years. It's hard to predict. Rather than sitting on the sidelines, my team and I stay very, very active in the market. We're always looking for deals. We're tracking prices. We're looking at asking and selling prices and watching for how long deals stay on the market. The best suggestion I give to others is not to overpay and just to get into a deal. Buy on actuals and never on speculation or some broker pro forma. Rather, be prepared to act quickly. Make certain that your equity and down payments lined up, your banking relationships are ready, your credit score is good, and you have to convey your ability to close, not just to the broker, but to the seller as well. So here are 5 strategies that you can use to make sure that your investments are protected when there is an all-out correction or even a recession. These strategies will be good for 2 years, even 20 years. They will always be relevant as long as there is multifamily investments. Okay, so number one, always buy in demand locations. All right, so as long as there are people, there will always be a need for housing. When there's a market slowdown, friends and family will often move in together to save on living costs. They will likely want to have access to public transportation, to highways, close to amenities like grocery stores and retail and shopping malls and hospitals and all in safe neighborhoods. We personally like to buy in B minus properties in good locations that have a value add component, but they also have a lot of commerce. There's plenty of jobs and population growth. Number two, keep up with the maintenance. Because people will move in together to save on housing, some owners may see their vacancy rates creep up. The inventory will be on the rise, and you'll need to be competing with other landlords for those tenant dollars, right? You'll want to make sure that your units don't look old or out of date or just worn out. The competition is going to be heavy. I would say that if you're turning units, you are able to put in better materials at a reasonable price. Do it today while the market is good. You can recoup your investments much faster, okay? I'm not saying to over renovate. Rather, I'm saying that if you're able to get a deal on, say, some ceramic flooring from a discount wholesaler for a property that usually call for vinyl and the cost is marginal, go ceramic. All right, that's just what we do. Number three, set up a reserve account. Knowing that a recession is coming, make sure you build up reserves in your reserve account to make up for any upcoming vacancies, any repairs, or any expenses that may be surprises, all right? If you set aside 7% of the total rent every month for 12 months, you'll save up 1 month's rent in your reserve. So if you don't use it, you can always deploy it back to your investors or maybe make a major improvement that'll drive your NOI. But regardless, having that cash set aside is a very powerful thing in case you need it. Number four, have liquidity. This strategy is related mainly to new deals, okay? Lenders will be hesitant to lend during the slowdown or a recession, and sellers will be looking out for cash buyers. During a recession, the loan to value numbers we see today, typically 75 to 80%, they're going to be much lower. Okay, some lenders may not even lend at all. There's plenty of banks that pulled out from the last recession. Having cash at your disposal, either liquid or lined up with investors, doing it today will be important to taking down deals when an economic storm arrives. And number five, know your numbers. Calculate and track your NOI, your net operating income, on a regular basis and know where your break-even point is. Meaning, know what your bottom line number is to cover the mortgage, your property taxes, your property management fees, insurance, and all your other expenses. You also want to know what other landlords are renting their units at and have a good understanding of where the market is trending. Ultimately, if you buy and manage a good property and apply some good strategy, you will always win. Yes, it will, be great to pick up deep discounts and, manage to time things perfectly in the market. But, I believe there's always a deal out there. You just need to work harder to find them. You need to build those relationships with brokers and lenders to make sure you can actually act. If you're waiting for, if you're looking to time the market, you're always going to forego all those gains from today plus cash flow in the coming years. Like all investing, it takes patience and confidence to build success. Ultimately, you'll want to make the call yourself, on when you're ready to make a deal. Regardless, it's been proven time and time again that getting into a long-term, well-positioned, and well-managed multifamily deal will deliver substantial returns time and time again. Anyway, do you guys think there's a recession coming? Let me know when. What do you think? Let me know in the comments. I would love to hear from you. And if you enjoyed this content, please go ahead and give it a thumbs up and share it. Also, check out the Bulletproof Cash Flow podcast on iTunes and Stitcher, and don't forget to subscribe to the YouTube channel. It helps us out tremendously. We're always working on getting new content out to you guys to help you build success in the world of multifamily. All right, so be great, and I'll talk to you guys again soon.